welcome all to this webinar. Uh, of course, the last, I think, few months have been very interesting for us. I think whenever you switch on television, you have something or the other, coming up. And tariffs have been, fogging limelights. Uh, and at times you feel that, okay, we are going ahead. Sometimes, okay, a trade deal is happening, and then suddenly you see tariffs, you see penal tariffs and stuff like that. So in this, very uncertain times, we'll try and see how, we can capture and provide our points of view. And, we'll also give a lot of data points. Okay, so because that's something that, we like to do. So, just 1 minute. Yeah. So basically, the background to it, and if you see why is also Trump coming after India. Okay, if you see in the table, the last column, says it all. That we have a reasonable trade surplus, almost $41 billion, uh, and almost equivalent to the whole of imports, of the US. Okay, so that is something which is creating this bit of discord, and definitely the US and Trump specifically would like to see how the trade surplus is sort of reduced and how it can become more balanced, uh, so that it's not so much negative in favor of the US. Okay. That said and done, how much does US contribute to the Indian exports as a percentage of the GDP? Okay, our exports are, almost like 2.2% of GDP. So it's not, a really very large one that, sort of impacts the economy, right? And before we go further, I thought let's just pause, let's, take a poll and also get your point of view. Okay, what do you think is the outlook for Indian equities over the next 6 months in light of global trade tensions? We'll request Tara to sort of bring up the poll. We'll give a few more seconds to allow people to complete their polls. Yeah, so maybe we will just end the poll and share the results. Okay, so basically, what is interesting is, almost like 49% are saying volatile but opportunistic. Okay, which is basically sort of saying that, trying to convey that the impact is short term. Okay, uh, the second largest is, that markets will be sort of range bound, and there are 15% who are bullish and 10% who are bearish. So I guess the popular opinion seems to be, that it's broadly not going to have such a large impact, in terms of the tariffs in the medium to long term. So that brings me back to, let's say, going back into, what are the impacts and some of the data items and stuff. Okay, so if you see, US, has announced a penal tariff basically on Indian imports, so which will sort of kick in as of August 22nd. Okay, uh, and this will make it one of the largest among all other, countries in terms of trading partners with the US. And we'll see that also data as we sort of go to the next slide. Okay, so currently, there's a 25%. And so if you see the 25% is sort of in a range which many of the other competing countries, countries which are competing for exports to the US, right, are anywhere between 19 to 26%. Of course, there are a number of them, 19 and 20, as we can see in this particular slide. So if you see, if the penal tariff comes into play, then it definitely will mean that for many of the sectors where the penal tariffs are there, we just cannot export to the US. Okay, actually, there's nothing in between. Okay, because if you have such a disadvantage of almost 30%, okay, versus other countries, then sort of it will not make significant sense. Yes, at this point of time, maybe China is a little higher than India, but broadly, if the penal tariffs come into place, then we'll probably go way past China as well. Okay, of course, China also has a similar tariff which sort of got postponed for 3 months. So we'll have to see whether that's also what happens with India. Okay, and coming back to some of the countries, and if you see countries like Singapore have got good trade deals. In fact, it is lower than all the other countries in the ASEAN region. The whole ASEAN region together came back and negotiated for a 19% and Vietnam at 20. So you'll find that the key countries, a lot of the ASEAN countries, etc., are all sort of lower than the tariffs of India. Okay. Um, and just to get an assessment of what is what are the places which are going to get impacted, and what are the share of India exports, okay, to the US, versus all the other exports in the particular segment or sector, right? So you will find that uh, the penal tariffs have been imposed, uh, I believe, as a negotiating tactic. Okay, and it's very obvious from here that these sectors will get significantly impacted. And I think it's also intentionally done that way to exert further pressure sort of onto India, because these are sectors which are priority sectors for India. There's a lot of jobs, that these sectors sort of have. There's apparel, textiles, even diamond jewelry, which is a larger one, okay, as well as machinery, metals, etc. Right. So you will find that um, some of these sectors have, are reasonably labor intensive, and the intention of it also, I think, was to, if you want to negotiate better, then you have to, uh, come and put in tariffs in places where it hurts the most, right? And what is it? That has happened with sort of other countries. Just to give you a sense of some of the trade deals that have already happened. Okay, and I think this will also be a little bit of a direction of the trade deal of the US with India as well. So what is that? I think in every trade deal, there's a push for what is it that countries can import from the US. Okay, uh, um, and that is something which, if you see whether it is the European Union, higher LNG and soya bean, for example, you know, of course, Japan has, lower tariffs on US agricultural exports. Okay, so you'll find that also there are other deals like, investments into auto and electronics, which they've sort of got. And Vietnam also has, agreed to purchase more US agricultural products in LNG. So I'm just saying that a combination of maybe tariffs, but I think what will swing things a lot, and what is swinging things a lot, is what is the additional, you know, uh, imports that other countries can do from the US. Okay, and also come back and give my view as to why the tariffs is there in the first place. Now, though the countries which you had trade treaties, there are some countries like India, which is this side, which have uh, it's still under negotiation, and they've also taken certain counter actions targeting US tariffs. Okay, and so you'll basically see that, for example, China and Canada and the European Union. Okay, like in the case for India, right? So even where some of the tariffs were in places where it hurt the most, I think the counteractions also have been similar against the US. So if you see it, very interesting that a lot of these are around agricultural, commodities, which are being sort of imported by these countries from the US. Okay, and Canada also has, done looked at tariffs on steels and aluminum, etc. With as the auto sector is will be, reasonably impacted. And again, what's interesting is, they're looking at uh, the regions which are, Republican led or leaning states. Like, all of them are the ones which have sort of been targeted by these countries as well. So, so I still feel some of this is just pure negotiation, and so where it hurts the most is where everybody tries to come with counteractions. Okay, now if these tariffs go through, then it's going to definitely impact in a certain way. Okay, but let me step back and say, why is Trump coming back and applying some of these tariffs in the first place? Okay, and what is the rationale for it? Okay, so there is a certain view. Okay, and I'm coming back and saying, yeah, there's a lot of noise that happens, and there's a lot of drama that happens around. But I think, what's the underlying reason? Because if we understand that, then we know why it is happening, right? So the key reason, in my view, for Trump doing it is because he sees that there's a significant issue for the US. Okay, there's a significant risk for the US. Okay, and the risk for the US is basically that uh, the borrowings of the US has gone to crazy levels, and the debt servicing is also going and skyrocketing. Okay, so um, uh, there's a view that something needs to be done to pull it back. Okay, so, and if you try to pull it back, you have two things that sort of you can do. Okay, one is you have to, as a country level, you have to reduce our fiscal deficit. To reduce our fiscal deficit, you can either increase the income for the country or reduce your expenses. Okay, so now income for the country will be like taxes, etc. Expenses, will be in some form, uh, like spending on certain projects and infrastructure and stuff like that. Now, both of these, if you try to reduce deficit from either of these, is going to have an impact on the economy. Okay, and the economy is going to face trouble out there. So that is something which Trump is trying to say. Okay, now if you know I have to now reduce my fiscal deficit, then what else can I do? Because I you cannot get into a situation where you have a recession in the US triggered by steps that you're trying to take. So the point is, now, how do I maybe get other countries to buy from the US? Okay, how do I trigger consumptions from outside the US? Okay, so if you trigger consumption from outside the US, is where you'll probably add in revenue, etc. The second thing is to bring in some sort of a customs duty like India has as well, right? And when you do that, you're also increasing the revenue. Uh, it's in some form trying to encourage local businesses. Okay, so once you encourage local businesses, and why will it encourage local businesses? Because if imports are costlier, then uh, you may find local products are more competitive. So So that is the thing that, the US is trying to see how maybe it can get in revenue from some of, uh, the imports that come into the country. Now, again, why is it also looking at manufacturing, and why is it trying to bring these tariffs in? Because it also wants to encourage manufacturing. And what's the logic for encouraging manufacturing? Uh, what has happened over the last few decades is that manufacturing has gone outside the US, right? And the dependence on the services sector has been very, very significant. So, if the dependence on the service sector is very significant, now this is a sector which is going to be impacted by AI, right? So how do you, offset the job losses that are potentially going to get, created by AI? And I think uh, the only thing that maybe that one can do is say, okay, how do I then go and see how do I bring back manufacturing jobs back to the US? Okay, so that in a nutshell is sort of why Trump is doing what he's doing. Maybe the drama is something else, but and how he executes it is, I think, basically shock and negotiate. Okay, and that's his style. And so that you come to a certain position of strength on the negotiating table. Okay, and that is something. This is why you are seeing all of these now. Uh, Now stepping back and coming back and seeing, okay, what has been India's response, and how it has been, and what is the view of that. I think the Indian response, I think, has been very, very good. Okay, and I think we've done the right thing not to get into an ego battle, not to get into a fight on that. Okay, rather take systematic measures to see how to address a situation like this, and at the same time not giving into the negotiation stance. Okay, so some of the things that India has done, for example, I'll capture the next two slides. Okay, both in terms of going out and reaching out to how do you increase exports from other countries too, saying that okay, what are the uh, measures that you can take to encourage exports from a cost competitiveness and stuff like that. So we have done that, but we've also made certain, the right noises, not giving into, importing, let's say, Russian oil. Russian oil today, Russian crude has, uh, you know, really helped India because of the lower crude rates, okay, and the compared to what is the actual market rate. The second thing that interestingly it has done, it has brought in a whole lot of exports, okay, because all said and done, the countries in the European Union, etc., uh, were significant importers of Russian crude. Okay, and they actually encouraged India also, I would say, to import it and supply it indirectly back to them, so that they don't face very challenging prices out there. Okay, so that is something that, and it is also common knowledge, and that was also the response that you know uh, basically the Indian government has given out. Okay, now that said and done, you know, there's all this time there's a question in everybody's mind saying that okay, but you know what? China is importing more of Russian crude than India, right? Um, so why is it that China is not getting targeted? Now, I believe that in this whole global negotiating strategy of the US and Mr. Donald Trump, I think they thought of singling out India, and because it's not as large as China, because China also would just come and counter tariffs and get aggressive if the US gets aggressive. To see how maybe they can pressurize India and make it as an example for other countries. Okay, um, and I think in that situation, India has stood strong. And interestingly, it probably has become the opposite of what their expectation was. Okay, now other countries are taking a cue from India, and I think the whole lot of countries which have come back and said, we don't want to F-35s anymore. Okay, and they've been sort of able to negotiate and come back strongly as well. So So I think India, by holding its ground, I think has done a good thing. Now, coming back to why has India held ground? Okay, so I think India has held ground because I think the US has no option, right? I think the US has no option. Yeah, I mean, I think the US cannot afford not to, have cordial relations with India in the medium to long term. In the short term, yes, Trump is negotiating, but in the long term, it doesn't make sense. Uh, if because India is the fourth largest economy globally, it definitely, the US cannot afford to not be a trading partner with India. Okay, so the second is also, from a political standpoint. Okay, India is possibly the best uh, sort of country to align with in order to counter, say, China. Okay, now again, some of these steps, they've taken, I think, too far, that it has had the opposite impact again, right? So by doing whatever they've done, we've actually they've triggered us and got us closer to China. Okay, so I think it's very complex. It's negotiations at a completely different scale, and that is something which is also creating all this volatility. But um I think over a period of time, the US has to maybe quietly backtrack and do a U-turn. Trump is known to do his U-turns and does it just like that. Okay, so and I'm sure that that is something in the medium to long term will happen. I think there's a lot of focus on trade negotiations and but I think but now everybody knows what the positions are. Everybody knows, like I'm just saying, for example, that India will not give in on certain areas, right? So, and which is true for all countries. I think so now there's clarity, and I think we are now in at a good point to sort of conclude negotiations and conclude trade deals. Okay. Till then, yes, there will still be uh, pressures, and there will still be volatility, and then there will still be posturing, and then there will still be threats, and all of that will continue till we have a trade deal. But I'm just saying that the US has no choice. The US also has, I believe that will come back and make a turnaround because it will start impacting the US itself, right? And it's not just India. India is probably a smaller part. So if you saw in today's news, there have been some bit of a patch up with Canada. Okay, and Canada is a very very significant trading partner for the US. Okay, and that is something which has impacted significantly. The dairy uh, business and the trade of the US, with respect to farmers and with respect to agricultural produce, all of that has been significant impacts, and it is hurting at the ground level. Okay. Now the other part of it is now the issue that I see for the US is a long-term issue. Okay. What has the whole trade, and the tariff wars that have triggered is I think every country is now saying, how do I de-risk from the US? Okay. And sometimes there are inflection points which trigger, a downward spiral. And that is something that now, even if India has signed off a trade treaty, I think we are going to be that much more cautious and careful. And similarly, even a country which is like Canada, which has been an alliance partner, and which is why you'll find there's a lot of companies and industries that are very connected and intertwined with the business that we do from Canada. Okay, because they were not a partner which they had thought will go away from the US or not align with the US in the future. Okay, but at the same time, because it's triggered off things, okay, Canada itself has looked at, for example, each of the areas where the dependence on the US is very high. And if you see all the treaties that they've signed, including something with India as well, go into areas which will sort of reduce their dependence on the US. And that's not good news for the US. And Canada is just one of the countries. I'm saying almost each and every country is going to do that. And all the alliance partners of the US, are all, a little cut up because, Trump did not spare anybody. Okay. So I have been a little cautious and negative of the US for a period of time. You can see that, of course, the US currency has depreciated versus other currencies. Versus India, it has, been the opposite because of it was depreciating till some time back when the penal tariffs came into play, right? Or the tariffs came into play. Till that time, the Indian currency was appreciating for a few months. Okay, so that is something that is there. I think there will also be a whole lot of stuff which is going to move outside, the US. The US currency also, people will see how to de-risk on the US currency. That's definitely been on the cards for the BRICS countries, and that's only going to accelerate. Okay, this would have triggered a faster acceleration towards that. Now, one needs to keep in mind that again, for the US, this is not good news because the BRICS countries, if you see, you have China, you have India, you have Brazil, you have South Africa. All of them are, and Russia, of course. Okay, all of them are countries which have a reasonable part of, the global trade, uh, and if all of them sort of start doing trade outside the US dollar, that's definitely going to impact in a very, very significant way over a period of time. So I'm saying all things put together, the tariff war may be short term, may help the US come back and regain its deficits and stuff like that. Okay, but in the long term, it's definitely going to be negative. Now, what are the steps taken by the Indian government? And so we'll spend some time on this section. Okay, is one is we have a whole lot of PLI schemes which are there, production linked incentive schemes. Basically, for exporters, they get a sort of a reimbursement from the government in terms of, and that is helps them become more competitive. Similarly, there are various export credit guarantees. There's anti-dumping duties on certain products. Okay, they've taken measures for the apparel industry by removing the import duty on cotton. Okay, of course, they've kept it till September 30th because I guess they are hoping that by then you'll have a trade treaty in place. If not, they'll probably, I think, extend it. Okay, and the other is a big move on GST rationalization, and that is something that I think will benefit all of us as well. Okay, so now what are the medium to long term measures? And I think this is what I'm saying. Sometimes from crisis, it triggers opportunities. Okay, so you will find that India has doubled up its efforts. Okay, and doubled up its efforts, saying that how do I reach out to all other countries to cover the any potential impact from the US. Okay, and of course, countries like Russia have also come back and said that we will also try and buy some of the Indian goods that the US is not looking to buy. Okay, and thanks to the crude trade that's happening with India and stuff, actually the Russian economy has probably grown well, probably faster than the US economy as well. Of course, from a much smaller base. But the point is, in some form, some of the trade that India is doing also benefits Russia and its economy, and to some extent, that's where they're also happy to support India in some form, uh, because it's also beneficial to themselves. And the whole cooperation between the regional, side, and the whole BRICS countries, if you go back and see, also strengthening with African and South American nations. Okay, so there's a whole lot of things which have happened. They've all triggered much quicker and at a crazy speed. And of course, I shouldn't miss out mentioning China as well, right? There have been things which had, uh, the relationship between India and China had sort of come down. Okay, but today, uh, I think both India as well as China are seeing that it's beneficial for to align, and especially at least on the trade side. I still believe in the long term. I think India also will be relatively more, say, aligned to the US than China, but one hopes that things sort of normalize, and that can also happen. There's some bit of uh, you know developments that in terms of GST reforms. So the GST reforms are significant there, and there's reduction, and interestingly, it is not reduced for a very very long period of time, and this has actually triggered now. What's the reason for that? And I think the good part is the Indian government has been fiscally prudent versus I think most other governments, okay, globally. And our fiscal deficit as a percentage to GDP has been sort of coming down. So, so at a time like this, in difficult times, that gives you that much more ability to spend and support the country at such times. So I think that's fantastic, and that's something that is going to help us. And interestingly, through all of this, okay, so the point is, one is what is our view, but I think what is the global view? What is the market view, right? See, if the market saw a larger impact of the tariff on India, and if they saw this, the trade treaty is not going to happen, okay, and markets, you must keep in mind, are one of the best predictors of the future. Okay, so what's interesting is while Indian markets have been relatively sideways and a little bit up and down. It's definitely not fallen off, like what it would have if the expectation was a very, very large impact. Okay, so the second part of it is more interestingly is again the S&P upgraded India. I mean, that's something that I believe that it was long overdue and pending, because if you see, India was one of the few countries where we are able to get down on the fiscal deficits. Most of the other countries, including the ones with the best of ratings, actually have deteriorated in terms of their government macros. So that's something that I think is great, and this also reflects from a credit rating agency which has been conservative and not given it for a long period of time. I think this is something which is there. There are impacts on a lot of positive impacts on of GST revision on many sectors, and you can see right from autos to the indirect impact of banks because of consumptions, okay, to a lot of the core sectors like cement, etc., have been sort of given benefits, and I think that will also, so any, say, GDP impact because of the US, in my view, will be more than made up for by, some of these benefits out there. So coming back to the domestic macros, okay, so this is the view that India is on its way to 10 trillion GDP. You can see that, it is picking up speed, and it has done so right from even post-COVID. It has continued to sort of grow, and that is something which is there. The other part is India. Why is it the growth in India also speeding up? It's normal, for a country which has crossed $2 trillion to speed up in terms of GDP growth. Okay, similarly, if you come back and see also when the per capita income sort of crosses $2,000 level, then you find that there's a spike that happens. We've seen that in Indonesia, we've seen that in China, and actually, if you go back and see most countries, okay, that is exactly what's happened, because when the per capita GDP increases, then the spending can also be significant. Okay, so I'm saying the basic uh, ingredients for India to do well in the long term are all there. Okay, the other part of it, there's huge liquidity coming from, let's say, domestic institutions and from domestic households actually, because if you see just the SIPs, okay, are today $3 billion per month. Okay, of course, last month you had a huge spike in uh, equity investments from domestic institutions. Okay, but even if I forget about the one-time spike that you see, if you go back and just look at SIPs, which I think are longer term, okay, and whenever the money comes in of that quantum, you'll probably see it's supporting markets and seeing one more move up. Uh, the other factors of the economy, the CPI has come down, and when the CPI come down, typically, the bank, the interest rates come down. Okay, and when interest rates come down, it becomes one of the biggest triggers also for a large growth. In fact, if you go back and see in the previous decade, lower interest rates from the subprime crisis that the US had was one of the reasons why the US economy did very, very well. Okay, so that is something that has been significant. CPI has come down to unimaginable levels actually. Okay, and that is something which will sort of help us. The growth rate also is sort of it saw a little bit of a slowdown, but it's also picking up as you can see from data itself. Okay, and a lot of us are wondering why markets corrected, fell. Yes, I think this is very healthy. There was a high base effect, that was there on GDP growth. And so when you have a high base effect, then there's a bit of a slowdown, but you're seeing that even that is sort of, you know, uh, getting is behind us, and the growth is sort of picking up. And one way which is I call a bit of predictive indicators is like, let's say, GST collections, because you may even see it on a monthly basis, and that will also come back, and that's good. PMI, which is a manufacturing index, to see, what is the how bullish are people there. Okay, again from low levels that we saw in around December and Feb, etc. We found that PMI has come back to the closer to the peak. So that's something which is there. There's a lot of government initiatives around manufacturing, around infrastructure. uh, the other big trigger for us, the long-term trigger, is basically how consumption is likely to move in India, and that is because of this particular, demographic of ours. You will find that the per capita is $0 to $5,000. Is where the bulk is today. But interestingly, you're seeing that it's likely to move to $10,000 to $35,000. Okay, so and if you see on the right hand side also, the volume, the number of households in those segments is going to be very, very large. So if that happens, India is going to do exceptionally well, and combined with the baby boomers type of impact that we are likely to have, similar to what US had. This is one of a key reasons for us to believe that India is going to be the country of the decade. Yeah. Then coming back to valuations now, yes, Indian markets have gone slower than most other markets, and taken a bit of a break from maybe some time back where we were right at the top. Okay, so and I think the way I look at it, all of it is healthy, and you can see that when you look at the PE ratios, right? Interestingly, the Nifty P ratio today is lower than the 5-year median. Okay, and the 5-year median also sort of has come off from the previous. We look at longer periods of time, typically closer to 20 PE is a buy. When you go to hit 28, 29 is a bit of a sell on the Nifty. Of course, you'll find that for mid caps and small caps, that number can be significantly higher than that. Okay, so Nifty itself now is sort of below. You'll find Nifty next 50 again, is below, the 5-year median. Uh, what is interesting is small cap has corrected some bit along with earnings growth, and it's in a very small range, very, very close to the 5-year median, right? The mid cap is the one which is elevated, and in my view, that's also to do with how SEBI has defined the large, mid, and small cap for the mutual funds, right? And the categorization that the SEBI has come up with, because what it has done is a lot of money has come into mid and small caps, and because the definition says that large cap is up to the first 100 stocks, 101 to 250 is sort of mid caps, And so a lot of money has come into that 101 to 250 stocks. So there's just those 150 stocks that are there, a lot of money has chased it because you're finding huge inflows that came in from retail investors because mid and small cap has done well in the past. So people have come back and invested. So that, in my view, is there. It is worrying still. I don't think it's worrying. You'll probably see, because if you see in the long term, the excesses can be really crazy, that you see on the mid and small cap valuations. Okay, so there are periods when they've hit 50 times, etc., etc. So that is something you need to keep in mind, that mid and small cap valuations can go to very, very high levels, and so which is why I think both large caps as well as mid caps will sort of come back and do well. Okay, I spoke of SIP flows. So if you see June, the last green one in this financial year, okay, has 27,000 crores. Okay, so over $3 billion, and you'll find that the trend is sort of increasing. If you even go back and see, this 27 in 2023 was 12,000 crores. Okay, so before that it was much lower and stable out there. So you can see that SIPs have been really strong in India, and we think that that will help us do well. So in summary, what is the view? Yes, Trump tariffs have created a lot of volatility. There's a lot of news around it. Okay, but we think it's a matter of time before a trade treaty sort of is executed between India and the US, and things will get resolved. Okay, we don't expect, in fact, I don't expect even penal tariffs to come into play. I won't be surprised if there's postponement out there. Okay, the lower, quantum of exports mean that, it's not going to have as much impact. Like I said, the Indian government has taken various steps to sort of support the Indian economy. Yes, there could be pain in certain sectors, if penal tariffs come into place. So that is something that we'll have to, tighten our seatbelts for. Indian markets have already seen if you ask me, more than a price-wise correction, it's a time-wise correction. Okay, because the Nifty, for example, if you look at 1 year, it's not been much, but of course, mid and small caps have come off a little more. So in mid and small, maybe you've seen a price correction apart from a time correction. But a time correction also can be very significant, right? Because let's say if I wasted one extra year in a 4 year period, the percentage return sort of automatically come down, out there. So now that is also good, because once you have a time or a price correction, then you're possibly at a better place if the economy and the companies are sort of expected to do well. And our macro parameters, which is also happening, with the macro parameters continue to be strong. Inflows, especially from SIPs, are very, very good. So I think that should keep our market up. So and even if we are looking at, we continue to track our portfolio stocks and the earnings growth that continues to be very strong. Okay, and so that also gives us comfort there that things will come back. And so if you look at the current markets, in the current market, what is it that you should do as an investor, right? So I think from periods of uncertainty, from periods of difficulty is where you find that the best returns come, right? An example is COVID, where you are seeing phenomenal returns from there. Again, if you saw the global financial crisis in 2008, again crazy. So if you go back every single time, of course, we you need to make an assessment of where this will end, right? So because I'm just saying, for example, if you saw the 2008 fall, right, which was one of the largest falls, if you came in even after a 15% fall, you were very early. Okay, so but you have to look at all things together, keeping in mind valuations, keeping in mind macro parameters, keeping in mind various other reasons we believe that we don't see that type of impact there. Unless you see a really fall off completely on a global scale side. Okay, not from India. So that is something that is, yes, that is a risk that could be there. However, I don't think these will sort of unravel so quickly. I think it'll take a little bit of time before some of those situations come in. So this is a time maybe to look at staggered investments into equities, We're also comfortable with mid caps, like I mentioned, mid and small caps, okay, because they've also seen a reasonable correction. Uh, One thing that one has been trying to convey, and a lot of clients who I've come across, talking to them on US tech stocks, AI stocks, okay, because they have done very well, uh, and it's always like that. Unfortunately, with markets, it tempts you to do the opposite. Okay, so at times when you think this is really going to do well, is when it comes off. And I can tell you, because many of us feel that we are insiders in these company, right? And we are seeing that things are moving well. Okay. I can tell you from past experience that insiders also get it completely wrong. Okay, because the way market is very predictive, it sees the future, and I'm seeing a few signs of initial red flags. And what are those? I think companies are beginning to realize that the ROI, and studies are showing that ROI is not as meeting expectations, including on AI. Okay, so that is something that we'll have to sort of watch out for. Okay, so what I would believe always, to do a staggered as it goes up, increase any of your ESOPs if you have. As it goes up, please keep booking profits. As it goes up more, please keep booking more profits. Okay, because otherwise you don't want you know uh, it to just be paper wealth. And I'm sure you can look back at past cycles. Okay, when the move happens downwards, it is just a spiral, and it becomes very difficult to do anything in that period. So just keep in mind, portfolios and your risk. Look at your asset allocation. I think if it is excessive in certain areas, then I would not suggest to go aggressive. But if not, definitely is something that you can take advantage. But then I'm through with my presentation. So happy to take any queries that you may have.